Let me tell you a story about a tax system that is both generous and unforgiving at the same time. A system that offers amazing benefits but punishes ignorance with the iron fist. A system that can make your dream of living in Italy beautiful reality or financial disaster. In this video, we're going to see 5 fundamental laws that every new resident must know. And these are not small details. These are the pillars, the rules of the game. And if you don't know the rules, you will lose. Let's face the rule number 1, the principle of worldwide taxation. This is the most fundamental law. In Italy, your tax obligations are based on tax residency, not citizenship. And as an Italian tax resident, you're legally obligated to declare and pay taxes on your worldwide income and assets. That means that every single euro, every single dollar, every single pound you earn, no matter where it is in the world, must be declared in your Italian tax return. Whether it's income from a business in New York, or a pension from London, or a salary from an American company, while you live in Italy, it all must be declared. This is the law, and if you break it, you'll be found. Law number 2, the obligation to declare foreign assets. This is the most common and most dangerous tax trap for new residents. The law, specifically the RW form, Quadro RW, of the Modello Redditi tax form, requires you to declare all of your foreign financial and non-financial assets and details and balances of January and December. This includes every single foreign bank account, every stock, every investment, every piece of real estate, even if it's just a few hundred euros. The Italian tax authorities have access to a massive international data sharing network by the name of Common Reporting Standard. They know what you have, and if you fail to declare it, the penalties are severe, starting from a few thousand euros and going up to tens of thousands of euros. This is not about the tax of the asset, it's about the penalty for not declaring it. The rule number 3 is the tax on foreign financial assets that goes by the name of IVAFE, I-V-A-F-E. This is a small tax on your foreign financial assets. It's an annual 0.2 or 0.4% for blacklist countries of the market value of your foreign financial assets. It seems like a small percentage, but it can add up quickly. It applies to all of your stocks, bonds, mutual funds, ETFs, bank accounts abroad, etc. And it's often a surprise for people who think their money is already safe. The law number 4 is the tax on foreign real estate, IVIA, the equivalent of the IVAFE, but for foreign real estate. It's an annual 1.06% of the market value of a foreign real estate. So if you own a house in another country, even if you're not renting it out, you must declare it in Italy and pay this tax. This law surprises many new residents who believe that because their property is not in Italy, it's not subject to the Italian taxes. That's not real. Law number 5, the Impatriati tax regime. This is the one law that can save your assets, your life. It's a special tax regime for people who move to Italy for working. It allows you to pay taxes just only on a portion of your income with a tax deduction of 50%. This is a very powerful benefit, but if you have to qualify, if you have to apply for it in the right way, correctly, this law is the best weapon we have against the Italian tax system. But if you don't know about it or you don't use it, you'll be paying full taxes on everything. So what happens in general when you ignore all these laws? Meet our client, we'll call him David. David was a successful professional from Australia who moved to Rome. He kept his Australian bank account open with about 50,000 sitting on it, and he didn't think it was a big deal. He didn't declare it. The Italian tax authority, through an automatic data exchange with Australia, again the Common Reporting Standard, knew exactly how much he had in the account. The penalty for not declaring a foreign financial asset is 3 to 15% of the value of the asset for each year it was not declared. For David, that small mistake turned into a fine of 7,500 for just 1 year. That's money completely lost, all because he was not aware of a single law. Meet another client, we'll call her Jane. Jane was an American retiree who moved to Italy. She owned a small apartment in Florida that she rented for $1,500 per month. A generic tax advisor in Italy, an average commercialista, told her, "Don't worry about the US property, that's taxes for the US." Well, the Italian tax authorities has access to US tax data. They knew about the rental income. They found out she had not declared a single euro of her foreign rental income for 3 years. So the tax authority, with pretty nice efficiency, hit her with a tax bill for all the back taxes owed on the rental income, plus a penalty of 120% of the unpaid taxes plus interest. So the final bill was over 25,000. And that was just for the back taxes and penalties. She also had to pay the EVA tax on the property itself. So a dream life in Italy was shattered by a single misunderstanding. These stories are not just about money. They are about losing your peace of mind. The time to understand your taxes is not when the notice arrives. It is today. It is right now. You cannot afford to be passive. You cannot afford to believe the old lies of handling everything yourself. The only way to win is to be proactive.
At Studio Rigo, we provide tax and strategic guidance for those navigating international complexity with significant interests in Italy. We work quietly, precisely, and always with the long term in mind. If you expect nothing less than clarity and control, you'll know where to find us. Thank you for watching. See you in the next video.